BeiGene falls again on blood cancer drugs results. Cathay says number of passengers coming into the city plunged by nearly half in November year-on-year. Stock slips 0.2%. Good day, traders. The Hang Seng eked out a small gain, thanks in part to Tencent's continuing march. On the mainland, the main benchmarks closed down. Catch up on the day's action below. By the way, thanks again to all of you who filled out our survey. We learned so much. Also, if you would like the live stocks blog emailed to you each morning, click here. Georgina Lee and Deb Price in Hong Kong. Note, information in this blog is on an as-is basis and not a solicitation or offer to buy or sell any securities or otherwise, and is not investment, professional advice or services in this regard. It is subject to our T&C. SCMP, as defined in T&C, shall not be liable for any loss, damage and costs relating to any investments in securities or otherwise in this connection. Tencent rises again, pushing Hang Seng into small gain. Hong Kong investors were back on the sidelines today, watchful for what goodies that President Xi Jinping might announce for their neighbor Macau as the Special Administrative Region celebrates its 20th anniversary of its handover to China this week. The Hang Seng closed 0.2% higher, to 27,884.21, after the benchmark meandered in a tight 195-point range to finally settle on positive territory, thanks to social media giant Tencent 700 HK, which rose 1.7% to 377 Hong Kong dollars and 60 cents. CNOOC 883 rose 3.5% to 12 Hong Kong dollars and 48 cents. The market is expecting President Xi will announce the setting up of a yuan stock exchange for the enclave, although not directly threatening the Hong Kong exchanges and clearing 388 HK, which closed 0.4% higher to 257 Hong Kong dollars and 60 cents. Still, for Hong Kong, which has been mired in violent protests into its seventh month, traders were holding back big bets on the city's stocks, given its embattled economy as slated for a 1.3% full-year contraction for 2019. Most of today's gainers were China-related stocks. Industrial and Commercial Bank of China 1398 HK rose 1% to 5 Hong Kong dollars and 93 cents. China Construction Bank 939 HK rose 0.6% to 6 Hong Kong dollars and 63 cents. Dairy product maker Mengniu Dairy 2319 HK rose 1.6% to HKJ $31.80. Georgina Lee. China stocks snap two-day winning streak. The initial euphoria surrounding Chinese stocks earlier this week faded today. Even the surprising cut in the 14 reverse repo rate and liquidity injection by the central bank failed to entice investors in. The CSI 300, which tracks blue chips listed on Shanghai and Shenzhen, lost 0.2% to 4,032.78, while the Shanghai Composite Index lost 0.2% to 3,017.04. Trading was mixed, as the indexes seesawed between positive and negative territories throughout the day. But at day end, both indexes closed lower, dragged down by healthcare stocks. Jiangsu Hengrui Medicine 600,276 ch lost 1.5% to 84 yuan and 75 fen. Wuxi Aptec 603,259 ch dropped 3.2% to 94 yuan and 64 fen, and Zhouan Laboratories 603,127 ch lost 4.9% to 59 yuan and 97 fen. Index heavyweight Queichao Motai 600,519 ch lost 0.2% to 1,168 yuan, while China Life 601,628 ch dropped 1% to 34 yuan and 77 fen. The People's Bank of China has cut the rate on its 14-day reverse repurchase agreement by 5 basis points, to 2.65% from 2.7%, while it injected a total of 200 billion yuan liquidity into the financial system, in another sign of its easing bias to stimulate the economy. but Chinese equities lost the momentum seen in the previous 2 days over stronger November industrial output and retail sales figures because they did not provide enough evidence that China's economic slowdown has bottomed out, according to Xu Lei, an analyst with Shinwen Hongyuan Securities based in Shanghai. One would need to observe at least 3 months of economic performance data to be able to say that the slowdown in China's growth has turned a corner, said Xu. European asset manager Pictet Wealth Management said it expects the US-China trade war to continue to weigh on China's GDP growth in 2020, as it forecasts growth dropping to 5.9% from 6.2% expected for 2019. BeiGene falls again on blood cancer drugs results innovative cancer drug developer BeiGene, 6160 HK, extended declines after announcing in a Hong Kong filing Tuesday that its drug Brukinsa failed to show statistical superiority in treating Waldenstrom's macroglobulinemia, a blood cancer. In its head-to-head test against Abiv's Imbruvica, BeiGene did show fewer side effects, such as fewer reports of irregular heartbeat. But the failure to show statistical superiority disappointed investors. The stock plummeted 6.5% Tuesday, and it is down 1.5% to 98 Hong Kong dollars and 45 cents today. Analysts have been bullish on the stock, with 13 tracked by Bloomberg rating it a buy, none a hold, and 1 a sell, with a consensus target price of 126 Hong Kong dollars and 26 cents. Today, CICC reiterated its outperform rating on the stock, and lowered its target price to 126 Hong Kong dollars and 10 cents from 138 Hong Kong dollars and 40 cents. But because the stock has fallen, CICC's target price anticipates a 28% gain rather than a 13.9% gain over the coming 12 months. Also today, China Securities reiterated its buy on the stock. Here's a feature for investors about Chinese moonshot biotech companies like BeiGene. They can be highly volatile. But if they get breakthrough drugs to market, they can deliver big gains to investors. BAIC drops on Reuters report about Daimler's plan to raise stake in their China JV. Daimler is seeking to buy a majority stake in its Chinese joint venture with BAIC Group, Reuters reported today, after initial efforts to raise its stake failed. The German auto giant, which owns the Mercedes-Benz brand and counts Geely Group as its shareholder, has been exploring several options to boost its control over their joint venture, Beijing-Benz Automotive, which includes raising its stake to 75% from the current 49%, Reuters reported citing unnamed sources. The joint venture is the main profit contributor of BAIC Group's Hong Kong-listed company BAIC Motor, 1958 HK. BAIC Motor is down 5.3% at 4 Hong Kong dollars and 45 cents. Sun Hung Kai to get rental income boost from West Kowloon site. Bloomberg Intelligence says Sun Hung Kai's record purchase of a commercial site in West Kowloon could boost its rental income when it is finished in 2028, with an estimated gross rental yield of about 4%, Bloomberg Intelligence writes in a new note today. The unit price of the site at 13,345 Hong Kong dollars a square ft is 73% below the transacted price of an office site at Murray Road in Central District acquired by Henderson Land at 50,064 Hong Kong dollars a square ft in May 2017. Its sale of 25% stake of the office portion to the Kwok family could reduce its land cost by 9.4 billion Hong Kong dollars, by rights. Its estimated net debt to shareholder equity ratio is 18.7%, compared to 12.9% as of end 1H. The site could provide a total gross floor area of 2.82 million square feet for office and 349,000 square feet for retail, BI says. Bloomberg Intelligence expects SHK 16HK will continue to dominate Hong Kong home sales over the next decade as its extensive residential land bank dwarfs those of competitors. But BI expects the developer will be challenged selling luxury homes, especially to mainland Chinese, amid the ongoing protests in the city. SHK won the plot on Austin Road atop the West Kowloon high-speed rail station, the biggest plot ever sold in the city, for a record 42.23 billion Hong Kong dollars in November. Read full story by Daniel Ren here. SHK has lost nearly 1% today to 115 Hong Kong dollars and 70 cents. Deb price 2:23 p.m. Hang Seng, Shanghai turned down in choppy trading. The Hang Seng index is down 0.2% at 27,793.50, while the Shanghai Composite is down 0.3% at 3,014. 2:18 p.m. Times Neighborhood to be priced at 5 Hong Kong dollars and 15 cents, debuts in Hong Kong on Thursday. Mainland property developer Times China 1233 HK said its soon-to-be spun-off unit, Times Neighborhood, has set offer price for its global offering at 5 Hong Kong dollars and 15 cents. That is slightly above the midpoint of the indicative range at $4.23 to $5.08. This means that its global offering involving 161.8 million shares will raise 833.2 million Hong Kong dollars for the company, Times China said in an exchange announcement. The separate listing of Times Neighborhood will begin Thursday, under the stock code 9928 HK. Times China's shares were down 0.1% at 15 Hong Kong dollars and 30 cents. Georgina Lee 2:16 p.m. Cathay to see 3 senior employees depart. At least 3 senior employees are leaving Cathay Pacific 293 HK amid a fresh round of staff departures at the struggling airline. These include 2 general managers and the head of a business support unit who were understood to have resigned. The latest moves came amid warnings of more job cuts at the Hong Kong flagship carrier's 27,000 workforce amid more than 6 months of protests. Cathay Pacific declined to comment on personnel matters. On Tuesday, Cathay said inbound passengers for November shrank 46% compared with the same time last year, a 4th straight month of high double-digit declines. Shares of Cathay Pacific were up 0.2% at 11 Hong Kong dollars and 22 cents. More details about what's up at Cathay here. Georgina Lee 2:12 p.m. Daiwa Capital Markets reiterates buy rating on Sun Hung Kai Properties. Daiwa Capital Markets reiterated its buy recommendation on Sun Hung Kai Properties 16 HK after the Kwok family said on Monday it would buy a 25% stake in the office portion of the developer's West Kowloon project. We see this as a sign that SHKP and the Kwok family are still willing to commit sizable capital to HK despite all the challenges and uncertainties in the immediate future. We also see this as a constructive move for SHKP's shareholders and should bode well for its commitment to keep growing its dividends in the coming years. In our view, analyst Jonas Kahn writes in a new note today. Daiwa kept its 12-month target price for SHK at 160 Hong Kong dollars and 80 cents. That'd be a gain of nearly 39% from Tuesday's close for investors in Hong Kong's biggest developer by market value. Khan said the purchase ranks as one of the highest if not the highest investments ever made by a private company on a single property project globally. We also note that this investment was made at a time when HK is facing significant uncertainties. Historically, HK has always been a market for crises. In the past, investors who bought in HK during crises eventually won. We note that each of the past crises had something unique. Only time will tell whether the current challenge faced by HK is really different, but we see the moves made by SHKP and the Kwok family as indications that there is at least still some capital willing to follow the past conventional wisdom in HK. The last time SHKP made such brave investments was in 2000 when it committed to the Kowloon station. Of analysts tracked by Bloomberg, 15 rate SHK a buy, 1 a hold, and 1 a sell, with a consensus target price of 147 Hong Kong dollars and 29 cents. SHK won the plot on Austin Road atop the West Kowloon high-speed rail station, the biggest plot ever sold in the city, for a record 42.23 billion Hong Kong dollars in November. Read full story by Daniel Ren here. Deb price 1:28 p.m. Investors taking fresh look at Tencent, HSBC, says analyst Alan Lee. The market has high expectations on outbound travelers and visitors coming to Hong Kong during Christmas, and Cathay Pacific 293 HK should be the major beneficiary, says Alan Lee, portfolio manager at Atta Capital. Lee is sticking with his call that the Hang Seng Index will rise to 28,000 by the end of the year. The Shi may face a bit resistance before 28,000, but I don't expect a deep adjustment, Lee said. He expects investors to prefer index stocks that are laggards, such as Tencent 700 HK and HSBC 5 HK. The Hang Seng has turned back up, and is now a teensy bit ahead by 0.01% at 27,845.44. Tencent has given up some of the morning gains, but is ahead by nearly 1% at 374 Hong Kong dollars and 80 cents. HSBC has slid 0.4% to 60 Hong Kong dollars and 45 cents. Cathay has turned up, and has gained 0.2% to 11 Hong Kong dollars and 22 cents. DEB price. 1:10 p.m. China Central Bank cuts 14-day reverse repo by 5 basis points, injects liquidity. The People's Bank of China has cut the rate on its 14-day reverse repurchase agreement by 5 basis points to 2.65% from 2.7%, while leaving the rate on the 7-day reverse repo unchanged at 2.5%, according to information on its website. With the 14-day reverse repo cut, it also injected a total of 200 billion yuan liquidity into the financial system. Analysts expect the reverse repo rate cut and liquidity injection are aimed at easing interbank short-term liquidity tightness caused by the tax season in China. Through a reverse repo, the central bank buys short-term bonds from commercial banks with an agreement to sell them back in the future. The reverse repo is part of China Central Bank's open market operations. The PBOC will continue to closely follow market liquidity conditions, and will flexibly conduct its open market operations in order to maintain a stable liquidity conditions for the year end, it said. Georgina Lee. 1:07 p.m. Pictet Wealth expects U.S.-China trade war to continue to weigh on China's GDP growth. European-based asset manager Pictet Wealth Management said it expects the U.S.-China trade war to continue to weigh on China's GDP growth in 2020, as it forecasts growth dropping to 5.9% from 6.2% expected for 2019. Senior Asia economist Dong Chen said in an email note that the latest trade negotiations and the Phase 1 deal do not, and cannot, change the nature of the tensions. The deal itself could be fragile, especially in light of bipartisan support for a hawkish stance on China in the U.S. at the moment, he wrote. Pictet expects the People's Bank of China to maintain an easing bias next year to support domestic demand, by cutting both the required reserve ratios of commercial banks and policy interest rate. It however did not say by how much nor how many times it expects these rates would be cut. Georgina Lee. 12:12 p.m. MTR, Hengan International and Mengniu Dairy among gainers in Hong Kong. MTR 66 HK, the owner and operator of Hong Kong's Subway, gained 0.7% in morning trading, rising to 46 Hong Kong dollars and 35 cents. Other blue-chip gainers included Hengan International 1044 HK, the Chinese diaper and sanitary napkin maker, rose 2.5% to 57 Hong Kong dollars and 15 cents, while Mengniu Dairy 2319 HK gained 1.8% to 31 Hong Kong dollars and 85 cents. The Hang Seng will start the afternoon with a loss of nearly 0.1%, last trading at 27,822.79. DEB price 11:39 a.m. Jiangsu Hengrui Medicine falls as Shanghai turns down the Shanghai benchmark reversed morning gains, dropping less than 0.1% to 3,020. Several stocks heavily traded by foreign investors lost ground. Ping An Insurance 601,318 ch slipped less than 0.1% to 86 yuan and 11 fen. Jiangsu Hengrui Medicine 600,276 ch lost 1.6% to 84 yuan and 70 fen. Meanwhile, China National Software and Services 600,536 ch lost 1% to 79 yuan and 2 fen. Georgina Lee 11:35 a.m. Northbound Stock Connect sees strong buy orders. The Shanghai Northbound Stock Connect saw its strongest buy orders so far this month on Tuesday, the latest available data on the Hong Kong Stock Exchange shows. Net inflow into Shanghai A shares totaled about 5 billion yuan, a rough calculation based on exchange data shows. The Northbound Stock Connect is subject to a daily 52 billion yuan quota for each of the Shanghai and Shenzhen Connects. It serves to limit net buying value every day. A lower daily quota balance indicates stronger buy order turnover for the day. On Tuesday, the daily quota balance dropped to 88%, meaning about 12% of the daily quota available was consumed by net buying orders. Investors were buying Queichao Motai 600,519 ch, Ping An Insurance 601,318 ch, and Jiangsu Hengrui Medicine 600,276 ch. Georgina Lee 11:31 a.m. Hang Seng Index, Shanghai Composite turned slightly down. The Hang Seng is down 0.02% to 27,839.22, while the Shanghai Composite Index is down 0.08% at 3,020. 11:19 a.m. Newly listed JS Global Lifestyle finding ways to reduce impact of U.S. tariffs. JS Global Lifestyle 1691 HK, which debuted in Hong Kong today, has been cutting supply costs to reduce the impact of U.S. tariffs so that its products remain affordable to consumers, President Mark Adam Balochistan said after the initial public offering. About half of the small household appliance makers' revenue is generated in North America. In the US, it sells under the brands Shark and Ninja. In China, its products sell under the brand Joyoung. The company has been hit by tariffs since September of last year. While tariffs problems were not completely solved, a big portion of Shark and Ninja business is tariffs exempt. So overall, about 33% of Shark and Ninja business will be tariffs impacted, said Balochistan. Its appliances like vacuums and air fryers continue to face a US 25% tariff. Here is a full story by Chad Bragg about JS Global Lifestyle and the impact tariffs have had on it. Snow Shah 10:57 a.m. ZTE shares gain on new 5G phone. ZTE 763 HK jumped in Hong Kong and Shenzhen after the Chinese mobile communications giant unveiled its flagship 5G handset, Axon 10s Pro, which it hopes to launch in the Chinese market during the first quarter 2020. Based on Android 10 operating system, it has a thickness of 7.9 mm, one of the thinnest 5G phones available in the market, according to several tech media outlets. In August, it was the first handset maker to launch a 5G phone in China, with its predecessor model, Axon 10 Pro 5G. Shares of ZTE 763 HK were up 3% to 23 Hong Kong dollars and 85 cents, and in Shenzhen 00063 CH they were up 3.3% at 34 yuan and 49 fen. Georgina Lee 10:52 a.m. Tencent continues its role. Tencent 700 HK is on track to post gains on 9 of the past 10 sessions, rising 1.4% to 376 Hong Kong dollars and 40 cents in early trading. Since the December 4th close, it has advanced 13%. For Tencent, its recent performance is better than my expectation, said Kenny Wen, wealth management strategist at Everbright Sun Hung Kai. I think given market sentiment improved significantly, investors are chasing those underperformed stocks which have fundamentals support, like Tencent. Meanwhile, several brokerage houses issued positive comments on it, which also helps. Deb Price 10:37 a.m. Hang Seng trading ahead by 0.3%. Shanghai gains 1%. 10:36 a.m. Star market stocks have one thing in common, they are all rising in early trading. All 65 stocks on the Nasdaq-styled Science and Technology Innovation Board in Shanghai known as the Star Market rose in early trading. That comes after a strong performance on Tuesday when another tech board in Shenzhen, Kai Next, saw its index rose to a near 19-month high. Some analysts say Chinese investors' demand for tech stocks has recently been revived by improved sentiment on US-China trade relations. Kingsemi, 688,037 ch, which listed on the Star Market on Monday, rose 20.51% to 71 yuan and 10 fen. Jiangsu EasyTech, 688,258 ch, rose 20% to 94 yuan and 81 fen. Suzhou HYC Tech, 688,001 ch, rose 9.3% to 49 yuan and 29 fen. Beijing Balance Medical Tech, 688,198 ch, rose 7.2% to 40 yuan and 44 fen, and Raytron Tech, 688,002 ch, rose 6.5% to 39 yuan and 61 fen. Star Market stocks are not yet available on the Stock Connect. Georgina Lee. 10:21 a.m. Daiwa Capital Markets reiterates buy rating on Cathay Pacific. Daiwa Capital Markets reiterated its buy rating on Cathay Pacific Airways 293 HK, despite its weaker passenger demand in November. The buy rating reflects limited downside risk on the back of its low valuations. Key risks include lower than expected passenger traffic and yield, analysts Kelvin Lau and Frank Yip wrote in a new note. Inbound passenger growth fell 46% year-on-year in November from a decline of 35% in October. Outbound traffic improved to -8% in November, much better than -13% and -9% in October and September, respectively, they noted. The stock is trading flat at 11 Hong Kong dollars and 20 cents. DEB price. 9:52 a.m. Maketube soars 66.6% in Hong Kong. Debut Maketube 1553 HK, JS Global Lifestyle 1691 HK, and Thailam Tech Construction 6193 HK started trading on the main board of Hong Kong Stock Exchange. The share price of Maketube 1553 HK shot up 66.6% to 3 Hong Kong dollars and 80 cents at the open, from the offering price of 2 Hong Kong dollars and 28 cents. The shares were oversubscribed by 7.27 times. The Chinese company produces and exports pipe-related products. In terms of export volumes, it was ranked the first in China's prefabricated pipe nipple industry with a market share of 7.1% in 2018. The share price of JS Global Lifestyle 1691 HK rose about 1% to 5 Hong Kong dollars and 25 cents at the open, from the offering price of 5 Hong Kong dollars and 20 cents. The shares were oversubscribed by 1.68 times. JS manufactures and sells small household appliances. Among all small household appliances providers, by market share, it was ranked the 6th globally, the 2nd in the US, and the 3rd in China in 2018, according to a Frost & Sullivan report. The share price of Thailam Tech Construction 6193 HK shot up nearly 31% to 1 Hong Kong dollar and 70 cents at the open, from the offering price of 1 Hong Kong dollar and 30 cents. The shares were oversubscribed by 44.99 times. Thailam manufactures and sells concrete-related products, including PHC pile, which is used for laying foundation of buildings, in Jiangsu Province, China. Among more than 40 players in the relevant sector, it was ranked 6th in terms of both PHC pile production volume and sales revenue in Jiangsu Province in 2018, according to a Frost & Sullivan report. 9:45 a.m. Shanghai inches up. Queichao Motai slips. The Shanghai Composite Index inched up by less than 0.1% to 3,024.64. Liquor giant Queichao Motai 600,519 ch declined 0.2% to 1,168 yuan and 19 fen. Among mainland stocks in additional to Queichao Motai that are heavily traded by northbound investors, Jiangsu Hengrui Medicine 600,276 ch fell 1.2% to 85 yuan and 3 fen. Among sectors in mainland markets, mini LED stocks jumped 1.2%, smartwatch stocks rose 2.1%, while e-cigarette stocks fell 0.9%, according to gauges tracking them. DEB price. 9:38 a.m. Tencent rises, Alibaba and Cathay fall. The Hang Seng Index rose 0.3 to 27,924.58, with 20 of the 50 constituent members showing gains on improving sentiment after China and the US reached a mini-trade deal. Tencent 700 HK rose 1.7% to 377 Hong Kong dollars and 60 cents, as investors see the stock as cheap compared to rival Alibaba 9,988 HK. Alibaba, the Chinese e-commerce giant, slipped 0.3% to 203 Hong Kong dollars and 20 cents. Cathay Pacific 293 HK fell 0.9% after reporting on Tuesday that its number of passengers coming into the city plunged by nearly half year-on-year last month amid protests. CSPC Pharmaceutical Group 1093 HK continued to rise, gaining 0.7% to 18 Hong Kong dollars and 48 cents. DEB price 9:24 a.m. Offshore a share ETF sees huge fund inflow. CSOP FTSE China A50 ETF 2,822 HK, an exchange-traded fund issued outside the mainland to invest directly in the A-share market, received $120 million of subscriptions on Tuesday, the largest single-day fund inflow this year, as international investors return to mainland equities as market sentiment improves. Total inflow over the last 4 trading days hit $240 million, the fund said. The Shanghai Composite Index gained 1.3% to 3,022.42 on Tuesday, completing a 3-day winning streak buoyed by increasing capital influx. The benchmark advanced 3.7% since Friday when Beijing and Washington reached consensus on the terms of a Phase 1 trade deal. Daniel Ren. 9:23 a.m. Geely Saxo Bank looks to tap Chinese market. Copenhagen-based Saxo Bank, in which Chinese carmaker Zhejiang Geely Holding Group has a 51% controlling stake, has formed a joint venture with its parent to offer financial and regulatory services to banks and financial technology businesses on the mainland. The Danish online financial products trading platform said the 50-50 venture with the parent would utilize technologies such as cloud-based services, big data and artificial intelligence to serve Chinese institutions in areas of trading and investment, robo-advisory, asset management, risk solutions and regulatory technology. Geely Holding, which controls Geely Automobile 175 HK, said it would fully support the deployment and operation of the joint venture, especially in providing local know-how. Daniel Ren. 9:23 a.m. Cathay Pacific stock has been gaining. Cathay Pacific stock has taken investors on a bumpy flight since it got caught up in the Hong Kong protest storm. But it has risen 4 of the past 5 sessions, including jumping 3.5% on Tuesday. That put the city's flagship carrier at 11 Hong Kong dollars and 20 cents. The last time it closed above 11 Hong Kong dollars was nearly 5 months ago, when on July 31 it finished the session at 11 Hong Kong dollars and 8 cents. Analysts don't see it rising much more over 12 months, betting overall that it will rising about 4% to 11 Hong Kong dollars and 65 cents over 12 months. But of those tracked by Bloomberg, 11 rated a buy, 6 a hold and 2 a sell. On Tuesday, Cathay reported that its number of passengers coming into the city plunged by nearly half year-on-year last month, as protests prompted passengers to go elsewhere or just delay trips. Overall, our expectation is that the rest of 2019 will remain incredibly challenging, said Ronald Lam Supor, Cathay Pacific's Chief Customer and Commercial Officer. Full story on Cathay's latest numbers by Danny Lee can be read here. DEB price. 9:21 a.m. morning guidance. Here's what we are watching this morning. Friday U.S. markets. What futures foretell? The S&P 500 rose 0.03%, the Nasdaq rose 0.1% and the Dow Jones Industrial Average advanced 0.1%. Hong Kong futures gained 0.4% and the FTSE China A50 futures rose 0.1%. IPO debuts. Make Tube Industry Holdings 1553 HK, Thailam Tech Construction Holdings 6193 HK. Economic statistics. Central bank action. Nothing major. Scheduled earnings. No major earnings. Please subscribe our YouTube channel. Listen news here. If you like the video, please like, comment and share the video.